Trends reversal. The most important element of trading. A successful trader knows how to follow market trends to maximize their profit. But just like Newton's law, every action has an equal and opposite reaction. In the trading market, trend eventually will occur a reversal, and the experienced trader can identify reversal using price action and reversal patterns. But what if I told you there is an indicator that can anticipate reversal before they occur, and you also can use this indicator to create a high profit strategy? In this video, I will show you. Open Indicator tab, searching for Redkay Average Effort versus Result Explorer, made by Redkay Trader. This indicator combines two very advanced trading concepts: volume price analysis and Wyckoff law of effort versus result. I know it sounds a little complicated, but let me explain. Volume price analysis. VPA is the examination of the number of shares or contracts of a security that have been traded in a given and the associated price movement by analyzing trends in volume conjunctions with price movements. Traders can determine the significance of changes in price and what may unfold in the near future. Wyckoff law effort versus result dictates that large effort is expected to be accompanied with big result, which means that we should expect to see a big price move associated with a large relative volume for a certain trading bar. Don't worry, you can replay it again or Google it to gain a deeper understanding. Also, we have a special bonus for you. As we collaborate with the Bybit exchange, registering through our link allows you to receive a reward of up to $30,000 for completing tasks. Additionally, you will enjoy the best discount on trading commissions and 24 hours per day support from us for resolving any exchange issues. Link in the description. Let's look at the indicator components. First, these green and red histogram are the combination analysis of price and volume. When the histogram is green, it means a bullish short-term trend. When the histogram is red, it means a bearish short-term trend. And this orange and green interleaving line is the signal line. This gray line is a smooth line. These two lines are the crucial elements in the later trading strategy. In the settings part, we need to change the MA type to EMA, and also we need to add two horizontal lines, one at 50 and one at -50. This strategy is pretty simple. When both lines are under -50 and the smooth line upper crosses the signal line, it means a buy signal. When both lines are above 50 and the smooth line under crosses the signal line, it means a sell signal. But if we only use this condition to enter our trade, which will result in low accuracy, the better way is to also consider the price and volume mixed histogram. Let's look at this example. When both lines are under -50 and the smooth line upper crosses the signal line, also the histogram is green and above 50, so we enter our trade. Another example. When both lines are above 50 and the smooth line under crosses the signal line, also the histogram is red and above 50, so we enter our trade. This is just one of the many strategies that you can do using the Redkay Average indicator. You can even use it with support and resistance, smart money concepts, and other indicators. On our channel, you will find a playlist called Education, where all the instructions and descriptions of how to each of these above-mentioned indicators works. Also, you can find link in the description to our Telegram channels with daily useful market analysis. If you have any questions about this strategy or anything you want to know, let me know in the comment sections below. Hope you find some value in today's video. If you did, you can hit the like button below to support us. Goodbye, trader.